as you have institutions globally and players globally come on chain, if the world is going to be mostly tokenized real world assets, which I think there's a lot of assets out there. So if mostly tokenized assets live on blockchains, there's going to be exactly one collateral asset that's a store of value that doesn't have any counterparty risk globally, and that's ETH itself.
GM, good morning. Welcome to the Milk Road Show, the daily crypto show where the Fed's money printer has more miles than your college roommate's Civic. I'm your host, Kyle Reidhead. Today we're joined by Vivek Raman, co-founder and CEO of Etherealize, and Danny Ryan, co-founder and president of Etherealize as well. Today we're going to discuss why and how institutions will move on chain, Danny and Vivek's thoughts on the future of DATs and value capture for ETH. And of course, maybe we'll get into some price predictions around ETH or adoption predictions around Ethereum. We're going to go into a lot of things around the Ethereum world today. So it's going to be an exciting discussion. Today's episode is brought to you by Nexo, the platform that grows your crypto without locking it away. And Figure Markets, grow your cash like a bank, no lockups, just real returns. All right, let's bring in the boys and let's get started. Vivek, Danny, how you guys doing?
Doing great. Great to see you.
Yeah, thanks for having us.
Awesome. Well, let's get things started just with, want to do a little bit of intro. So I'd love for you guys both just real quick, give us your quick background and just explain what Etherealize is to the listeners, if you don't mind. Vivek, let's start with you.
Cool. Danny and I have complementary backgrounds, which is sort of emblematic of Etherealize. I'm not that OG in Ethereum. I spent 11 years on Wall Street. I was a sell-side trader, which means I was trading at several banks, Morgan Stanley, UBS, Deutsche Bank, Nomura. I traded really esoteric products in credit, specifically high-yield bonds, distressed bonds, loans, credit default swaps. And to me, I'm a technologist at heart. I got sucked into Wall Street because it was the coolest talent. It was really, really high profile. It was a really fast way. It was a meritocracy. And so I came into that out of college. But after 10 years of being on Wall Street and hopping from bank to bank to bank, I saw zero technological progress whatsoever. And that was just surprising to me because I saw in the 2010s, the FANG stocks rose and there was a huge, huge wave of the tech sector rising and the banks never caught on. So I quit everything. And then serendipitously, when I quit, left New York City, left the whole Wall Street world behind. I got introduced to, very ironically, a team of Ethereum Foundation security researchers working under Danny, unbeknownst to me. And they taught me about Ethereum. And they taught me about how it was a settlement platform. It was a blockchain that the whole world could build smart contracts on. And I started going down the rabbit hole and realized that this could actually be the answer to upgrading Wall Street. And that was 2020. And so for the last 4 years, I sort of took it as a mission upon myself to go back to the network I built from Wall Street. It still kept amazing relationships there and love everyone there, and said, hey, why don't we start injecting technology? Why don't we start using this whole public blockchain thing? And for 3 of those years, I got politely walked out of rooms. People were like, cool, but it's too risky. The technology is not ready. We're not allowed to use this. Last year, all of that started to change. And instead of being the crazy Ethereum guy, people were like, wait, come in and tell us a little bit more about this Ethereum thing. Why is Larry Fink saying the whole world's going to be tokenized? Why did the ETH ETFs just get approved, even though we were in an oppressive regulatory regime? And so, I've been trying this what became Etherealize for a long, long time to get institutional adoption. When we felt that momentum shift, we wanted to mobilize. And I knew that to actually go to institutions credibly and talk about Ethereum, we needed real legitimacy. So we went to the Ethereum Foundation, got a small grant from Vitalik and the EF, started Etherealize, and it's been a roller coaster since. But the mission is to onboard as many institutional players and assets and bring as much utility to Ethereum as possible.
Love it. Danny, why don't you take the reins?
I was at the Ethereum Foundation for 7-8 years. I ran their research group and protocol group and worked on like high level strategic stuff while there. I had my hands deeply in the merge. So everything proof of stake for Ethereum helped drive research, helped drive specifications, and helped spend a lot of time just working with teams across the world, getting that thing over the finish line. I left last year to come up for air. Just my mission was accomplished, and I was curious to see what else the world had. Saw the shift in the regulatory environment, Saw people like Larry Fink saying it's time to actually use these systems. So got linked up with Vivek and have, dived all into onboarding Wall Street, which strange, like if you told me that a few years ago, I'd be like, no, why would I care about that? Like I'm like crypto native. I care about, but I really, I see this time as very critical, right? Like crypto was attempted to be regulated out of existence in the last administration. I was personally served by the SEC. Now I see the pendulum swing heavily in the other direction. But I think if we onboard capital markets during this window of opportunity, then it's not going to be should crypto exist or not. It will become, oh, crypto exists. It's actually really valuable for society. Let's like figure out how to regulate it in a reasonable manner rather than this kind of binary black and white world. So very very exciting opportunity in time, but also like very mission oriented. I think this is how we really bring crypto into the fabric of society.
Well, I think you guys started Etherealize at a very important time too. There was just a lot of like mixed feelings about Ethereum in general and their business development team and their marketing team, which I mean, they don't really fully have that, but they just didn't really have someone that was reaching out and trying to bring in others, institutions and otherwise into the Ethereum world. Whereas, some of the newer chains, they've got full business development teams and they're spending a ton of money on this. And so I think you guys came in at a good time to do that. Let's zoom out just real quick. You guys wrote a report recently, or Etherealize did, on like why Wall Street needs blockchains and why Ethereum is going to be the blockchain they're going to use. Can you just walk us through the sort of macro level of like why does the financial world need a blockchain, and then maybe we'll hit on that of why Ethereum is probably the right one for them. But if you can guys just give us the like benefits, the value add, like why is it that they need to come over and use blockchains?
I'll start it off because it's very, very near and dear to me, and it is a real mission. Wall Street is, and specifically US capital markets, are the most efficient in the world. They're the biggest in the world. They're the home for capital formation, and it's unlocked so much innovation globally. But Wall Street operations literally operate in the Stone Age with Stone Age technology. Like they still use faxes, they still use emails to settle trades. Everything is still done voice over the phone. It's comical at the lack of technical innovation, given how powerful Wall Street capital markets are. And so it's really, really hard to have something that's already working very well. That's the leader globally change. And the last change that we saw for Wall Street was in, I think, the 1990s when stocks went digital from paper settlement. But that's really it. Like nothing really changed. And that's part of the reason I left, because the bond world still settled. It took days, not minutes or seconds. What blockchains do is they allow assets to be digitized and put on a publicly accessible platform. And by doing that, trading, settlement, tracking, commerce becomes much easier. The back office operations become much, much easier. And that's a huge unlock. It seems not that sexy, but it actually just increases the velocity of money and velocity of trade. That's so, so important. That was such a big light bulb moment that I was like, this is a mission to bring as many Wall Street assets, institutional assets, onto public blockchains, because it goes beyond Wall Street. As Danny said, like that's a starting point, but it opens up access globally to retail, to everyone. And that became a really big mission. So then when it comes down to what is a public blockchain that can actually facilitate all of this commerce, it has to be something that's global, neutral, decentralized, has 100% uptime, and is reliable and trusted by everybody. And that's Ethereum. So when I looked at Ethereum as an outsider, as a Wall Street guy, it was the only option. It was the only thing that actually made sense that could onboard the world's capital markets. And as I've gone through the journey, it's gotten more and more clear that Ethereum plus this layer 2 ecosystem is the best architecture. And if we're going to upgrade the financial system, it has to be on the right rails. I think the worst thing that could happen is we choose something that's centralized, that's a company that has business development, masquerades as a blockchain, and onboards too many assets and then breaks. We need the biggest global neutral technology. And so that's what we wrote about in the report on Wall Street needs blockchains, because blockchains are the place where assets can be digitized. And the blockchains that we choose need to be global, decentralized, scalable.
Right.
I always go for it, Danny.
I was gonna say, if you look at some of these inefficient Wall Street markets, they're riddled with middlemen. and manual processes. With a neutral blockchain, we get a single source of truth and we get native programmability. And there's all sorts of other things that fall out of it, but like just those two things are a huge, huge, huge unlock for Wall Street.
Right. I always give the example of like, just go into a bank and try to like, I don't know, open up a bank account or send some money to someone across, across seas. And it is the most like, you actually feel like you're back in the 90s. Even like the banks kind of look old and shitty. The people in there are generally pretty old or like a little bit clueless. And then it's just like, I could fly over to Europe faster with a thing of cash than I can send my money over through the bank. And I'm like, how does that make any sense in 2025? It's absolutely insane. So that's just like an easy example. But then you think about all the things that make up the financial system outside of just like doing your normal banking, and all of that can be sped up, can be more efficient, can be cheaper, all these different things. So I think there's so many reasons of why Wall Street and finance in general needs to get on a blockchain. Why has it not happened yet? Like since 2017, we're like, institutions are coming, they're going to be building, they're here, and then they're never actually here. And I think this is the first time where when I ask this question, it's like, okay, it's pretty obvious they're here at this point, or at least they're starting to be here. What's taking so long? And like, what inning would you say we're in? Like, what's holding them back even today from just like, BlackRock and all these guys like launching full on? Like some of them are slowly dipping their toes in, and we're seeing a little bit here and there, but it's still extremely slow. Is it regulation? Is it just institutions are just slow as heck? Or like, what are your guys' thinkings around this?
I would condense two major components into maturity, right? Regulation it was not mature. There was not clarity, and we're really making headwinds this year into doing so. And these platforms also, they needed to be more mature. Like Ethereum's been online with 100% uptime for a decade. That's different than 3 years, quite frankly. Right. The security tooling and dev tooling and everything in the Ethereum ecosystem it's world class. It's institutional grade right now. Whereas a few years in, it's like the chances that you accidentally lost $100 million because of some silly bug because you didn't have like static analysis or proper auditing infrastructure in place was kind of high. Like not a lot of money is lost through these like stupid errors anymore. And so both like people's understanding, regulatory understanding, and kind of just like integration into the psyche of America and Wall Street, like that has become more mature, and the platform has also become more mature. And so I think we're certainly, that's a major component of why this didn't happen a handful of years ago. I also think that like banks are feeling like they need to innovate. Banks are worried that fintech's going to eat their lunch. Banks feel like they need to adopt or they're going to be left behind. But at a certain point, like they're not necessarily major innovators. And I think that in the past, especially in like 2017 era, it was a lot of, oh, we'll go ask the banks what they want. We'll do pilots. We'll we'll consult, et cetera, et cetera. Whereas I think what we really need to do is we need to walk into there, figure out what the problems are, and create new products and innovations that draw and pull the entire banking sector and Wall Street sector onto blockchains. It's not going to just happen by accident. And I think you need the best in the world from the blockchain side, and they need to understand the Wall Street side, and we need to compel these assets on chain through like real utility, not just vapid kind of partnerships and proof of concept and stuff.
Are they open to it yet? Like when you go in there and you're like, hey, these are the problems we're seeing. Here's how we can fix it with blockchain. Are they like, okay, come teach us, like, let's build this? Or are they still like, nah, get out of here. We don't really care. They're scared of innovation, or they're scared of, I don't know, crypto replacing them. Like what's their mindset like, or their perspective?
We talk to them every single day. We get new data points every single day, and it's a resounding yes. It's unequivocally, and it's changed a lot. We started Etherealize almost exactly a year ago, and there was real resistance. There was real skepticism, even around Ethereum. People were like, "What is Ethereum? Why hasn't it had a presence?" Fast forward, I think Danny touched on the important point, which is the technology stack is now ready. I can't understate how important the regulatory clarity and how important that was. Stablecoins are not part of law. Like the Genius Act passed. Clarity is in the U.S. government, the Clarity Act, and we went and testified in front of Congress on it. that gives institutions the confidence they need to actually do real implementations and not just be lost in pilots and consulting things. And that's all happening right now. So I think it's gone from skepticism to curiosity to now it's almost entering the stage of FOMO where if banks and asset managers don't adopt some sort of blockchain strategy, they're going to be left behind. It kind of feels like AI when every bank and asset manager needs to integrate ChatGPT or some sort of LLM internally. The same thing's happening with blockchain in real time. And so, yeah, the opportunity is finally right now because we get asked that all the time. People always say, why now? And it is literally the perfect confluence of tech being ready and regulatory environment being ready.
So what are the things that they're starting to implement? Like, what are the trends that you guys are seeing today? Help the average person who's probably not in finance. The listeners here, many of them are not on Wall Street, and they're like, okay, the institutions are coming, but like, what does that mean? Like, what are they trying to build a product that's going to compete with like Aave or something, or are they doing things that are just like internally going to make their lives more efficient? Or what does it mean when they're actually starting to come in and build and do things on chain? What is that?
In one phrase, reinvent their operations and their processes using this blockchain infrastructure. So blockchain really becomes a part of like the fabric of the banking system, and it'll grow past banking. I mean, I know we're going to focus on Wall Street for this episode, but there's a lot more you can do beyond Wall Street, and I think it's really important to highlight that for Ethereum. But they leverage blockchain infrastructure to improve their operations and processes. The first step of that is digitizing their assets, which is the whole tokenization thing. So tokenization is the clearest product market fit. Tokenization encompasses stablecoins. The first thing you do is you tokenize the dollar. And it, like you said, when you go into a bank to send a wire to Europe, it can take 3 weeks. If you tokenize the dollar and send a stablecoin, it's instant. Similarly, as you bring on more and more of their institutional assets, bank deposits, assets in fixed income, stocks, I mean, the whole world. That's when the system really starts to gain momentum. And so that's what they're trying to do. And they're trying to do this on public blockchains, but they're also trying to do this in environments they can control and have some customizability and have some privacy. And that's where the Ethereum layer 2 model comes in, because you can now have your cake and eat it too as an institution. You can have your own blockchain ecosystem, have a revenue source that actually creates new revenue upside for you, and be plugged into the largest blockchain ecosystem on the planet, which is Ethereum.
Right. So is privacy a thing that, like, are there certain features that we still need to build or get out there for them to actually fully embrace this stuff? You mentioned privacy. I imagine that's one of them. Like right now, if it's just fully public and everyone can see every transaction that they're doing, like it's probably not the most ideal thing, although I know it's a thing that crypto people love. It's like, well, a lot of companies, especially in the financial space, are not going to do that. So is there more features we need to build? I mean, you mentioned privacy and we kind of have that with layer 2s already. Are there more things that we still need to get right and finish for them to really embrace this? Or where are we at in terms of the infrastructure and the things that we're building? Danny, you already mentioned like the tools are pretty good, but is everything kind of complete or do we need a lot more?
I think privacy is really one of the last missing pieces. For a number of these institutional markets, privacy is table stakes. It's not like you show up and say, we have privacy, and they're like, oh, great, like what a great feature. They're like, if you show up and you don't have privacy, like they can't even have the conversation. Like these markets don't operate in ways that you can just leak information willy-nilly like you do on blockchains. And so Ethereum, I think, is leaps and bounds ahead of the rest of the pack here. Interestingly, because of the massive amount of investment in ZK rollups for scalability. ZK, zero knowledge, you can use it to condense information and ultimately get scalability through the ZK kind of rollup construction. But zero knowledge, you can actually hide information through these cryptographic techniques. And so we have all of these tools. I mean, literally hundreds of millions of dollars have been invested in productionizing ZK systems over the past 5+ years in the Ethereum ecosystem. And so we have all of these tools that are rich, and we're able to use them to architect private, kind of bespoke private applications to handle market needs. And so you're seeing, I think there's going to be a wide range of the way these are built out. On the one hand, you're going to see very bespoke kind of applications built with advanced cryptographic techniques like ZK. And you're also going to see fully private environments, for example, like Aztec as it comes up. And there's trade-offs to both of these, but Ethereum really has set the standard for how we can kind of architect real, true privacy in these open systems.
If long meetings and judgmental bankers are your thing, Nexo's probably not. Nexo is a premier wealth platform built for people who value their time and money. It's built for people who have idle cash lying around and want it to grow fast. Whether it's Bitcoin, Ethereum, or even Forex pegged assets like USDT or USDC, Nexo offers up to 14% annual interest and access to crypto-backed credit in under 24 hours. Your assets need a platform built for growth. Join Nexo.
Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets.
How fast do you guys think this is going to come? So like, I just was editing a report from one of our analysts talking about tokenization of stocks. And he's like, okay, there's 100 trillion or whatever it is like of assets in equities. And that's beginning to get tokenized. We're at like 400 million or something like that right now. So it's quite small. But, you know, he's just kind of in the report was talking about, you know, that's going to come on chain because it's better on chain. It makes sense that it's going to come on chain. But there's still, he kind of walks through like 4 different ways that companies are trying to do it right now. There's, you know, you can wrap the equities, there's native tokenized stocks, but there's kind of different formats of it. So we're still trying to figure out what is the best one. And I think regulation plays a big role in that. But let's say, you know, we get the market structure bill, you know, end of this year or something, and we start to get that regulation. Is this something that's just going to be a huge wave and it's going to come fast? Are we looking 5, 10, 20 years? Like, based on what you guys are understanding from the institutions that you speak to, how fast is this coming, do you guys think?
It's going to be fast. And I think the real driver for a particular market is going to be the amount of the utility that's unlocked. So equities are interesting because like you bring them on chain, you get 24-hour trading, you get global access, you can combine them in smart contracts, you get nice utility. And so like there's going to be increasingly things are going to be drawn on chain, whereas some of these more esoteric asset classes, they're in the Stone Ages. And so once you give them an upgrade, the assets are just going to dump on chain. Like they're just in isolation. There's like, oh, I don't need to have that entire section of my company that does manual checks for this asset class. Oh, we don't need that middleman anymore. And these assets are just going to jump on chain. And so it's going to be a wide range depending on the asset class, but I think they're going to pour on chain. I don't know.
So is it not equities that are going to be the fastest? You're saying there's other things that you think are more suited to come on chain first?
I think everything will be parallel process. I think crypto has, for whatever reason, again, I'm more of an outsider looking in. I'm newer to the space. I see it as very tribal and zero sum. I think everything belongs on chain. So everything's a huge pie. I think equities are going to flood on chain. I mean, you're seeing NASDAQ said that they're going to enable tokenized stock settlement as well as regular way settlement. I mean, tokenization of stocks is going to happen and it's wonderful. We think there is a whole, I mean, the world of assets is much bigger. So we think there's a lot of other things where you can have bigger unlocks, as Danny said. But all that said, the thing that people forget is blockchains have been around for 10 years. Ethereum's been up for 10 years. People have tried this whole permission blockchain model, tokenizing things for the last 10 years. None of this is new. That's why when I go and do these pitches, people have heard of all this before. They're just like, all right, why now? Because they're familiar with tokenization and blockchains. It's been 10 years of trials and lack of traction and adoption. I think all of the adoption is going to come right now. And it's going to get all unlocked by Genius, by Clarity Act, and by institutional and governmental wills aligning at the exact same time. And when that happens, we're going to see trillions of assets come on chain very, very quickly. And I think it's going to happen in the next 1 to 2 years. And then it'll go exponential from there. But we're not 5 to 10 years out anymore. Like this is not a new experiment anymore. It's how responsibly can we make this happen? And we think Ethereum's going to benefit far greater than any other ecosystem because of that.
Right. Okay. So I think for most people, they understand the bull case of why assets are going to come on chain, not just digitally native assets like we already have, like Bitcoin, ETH, but like real world assets, like, you know, physical assets that are going to be moved on chain because it's better there. It works better. It's more efficient. It's cheaper, et cetera. So I think we understand that. You guys also wrote a big report around the value accrual of ETH, because if the whole world comes on chain and Ethereum is the chain where the whole world comes on to, okay, that's great. But there is still a world where maybe that happens and if ETH the price, ETH the asset doesn't really outperform, right? Like you could just get a ton of activity on Ethereum and maybe it's not that big of a deal. Why do you guys think that all of this activity or these assets that are going to come onto Ethereum, why will that translate into ETH the asset actually going up and doing well? Why will it accrue value, I guess, is what I'm asking.
You want to start, Danny? We can go on for a while on this.
Fundamentally, if the entire global economy is running on this platform, ETH, the asset, ends up with a very unique position. It is the thing that actually has the least amount of risk in the system in terms of like the way the infrastructure works. It does not require a counterparty. It does not require some legal contract says that this thing's in reserves. It does not require and it is borderless. It is all of the magical things that kind of crypto is, and so it ends up taking a very like unique position in terms of just an asset in the system. And so I think that's certainly like a core component of it. Vivek can dig deeper.
I think Danny nailed the biggest use case, which is as you have institutions globally and players globally come on chain, if the world is going to be mostly tokenized real world assets, which I think there's a lot of assets out there. So if mostly tokenized assets live on blockchains, there's going to be exactly one collateral asset that's a store of value that doesn't have any counterparty risk globally, and that's ETH itself. USDC has counterparty risk. It's Circle. You see a lot of permissioned RWAs. They're going to stay permissioned. They're still going to have jurisdictional controls. That's great. That should happen. But to translate between jurisdictions, between these assets, ETH is the trustless collateral, and that's worth tens and tens of trillion. That's like the zoomed out real bull case is when everything is on chain. ETH is a permissionless collateral that has no counterparty risk, and that's really, really powerful. If I zoom out, there's a lot on ETH the asset. We wrote a paper, ETH digital oil for the digital economy. That's the case where ETH goes to tens of trillions or much higher than that. In the interim, I think people have focused too much on revenue for blockchain infrastructure when blockchain is exactly that. It's infrastructure. It's the rails to bring the world's assets on chain. And Ethereum is in its Amazon moment where it's scaling. Ethereum, and it's successfully scaling. There's a plethora of really successful layer 2s. They all have different experimentation configurations. Some are ZK rollups, some are optimistic rollups, some are run by companies, some are run by the community. Some are private, some are public. It's really wonderful to see the innovation happening on ETH layer 2s is insane. And the scale that's happening because of ETH layer 2s is insane. But we have to remember, no one's onboarded yet. Like people don't use public blockchains yet. So people don't see the value accrual happen. Every time a transaction happens on ETH layer 1 or layer 2s, a tiny bit of ETH is burned. And so if we're at 0.1% adoption and we're going to get to 50% or 100% adoption down the road, that's going to burn a lot of ETH. ETH has a burning mechanism in there, and ETH will be a deflationary store of value asset. And it's going to be, the most attractive asset in the world to actually just hold as a store of value. And we see that happening as well. We're just early.
Right. I love that you guys focus on the collateral side. This is the thing that I always say as well, is forget the revenues, forget the burn even. For me, it's like, it's inflationary of, I don't know, like 0.5% or something. And it's like, if we can get it deflationary to, 0.5% deflationary, it's like, is that really that big of a difference? Like, not really. It doesn't actually really matter that much in the grand scheme of things when you look at the numbers. But if the activity and the value of assets that come on Ethereum just explodes and goes exponential and becomes massive, as you said, ETH is the most trustless asset on Ethereum, right? It has the least risk, I guess you could say, because it has no custody, it has no third party, has no smart contract risk, all that kind of stuff. Like there's definitely some sort of value to that pristine collateral. It's like, why is the US dollar so important in America if you're transacting in America? Well, it's backed by the US government, the US Army. And so you kind of have, it's kind of the least trusted asset, I guess you could say, in the US. ETH is kind of the same thing if you're going to have this massive economy on Ethereum, which it sounds like we all believe is going to happen. So I think it's important to recognize it's not really so much about the revenues today. Maybe in the future, it might be a way we value it. But if you guys think about how you value ETH today, you're probably not looking at revenues and fees and all that kind of stuff, or is that something you put into your models? Not at all.
I think revenues and fees will be important later once we've scaled to absolute global adoption. But the fact that ETH is a store of value that has monetary properties today that are comparable and in some cases better than Bitcoin's today means that we see two digital store of value, pristine store of values with different use cases. One is Bitcoin, and you can't do much more than Bitcoin other than hold it. It's digital gold and it has its issues. The other is ETH, which has a staking yield, which people love yield. It has a capped issuance schedule. So it has capped inflation. It cannot ever grow more than 1.5% per year. That's really, really important. Bitcoin has a supply cap. ETH has an issuance cap. And ETH is actually it's useful. It's productive. It can be used as collateral everywhere. And it becomes more and more valuable the more real world assets come on chain. And you have this call option that one day when the whole world's using Ethereum, you're going to get a huge revenue, you're going to have a huge yield, you're going to have deflation. It's one of the most unique assets ever. And that's why part of our Ethereum mission, I mean, obviously we want to onboard as many assets and institutions as possible onto Ethereum. But we also want to highlight that ETH is an incredible store of value for the ecosystem.
Do you guys have an opinion on what happens to Bitcoin if this thing you guys are saying plays out? So Ethereum brings in multi-trillions of assets on top of Ethereum and it becomes this store of value and the pristine collateral within that economy. Does Bitcoin still fit in that world, or do you guys have a strong opinion one way or another on this?
Yeah, I mean, I think the value of the asset that powers the global economy has a far higher ceiling than digital gold. Also, I'm a firm believer that the security model of the crypto economic security model of Bitcoin is broken, and at some point in our lifetimes, we're going to see some nasty things happen on the Bitcoin network. So I'm not that's not my horse in the race, and for a number of reasons. But right now, obviously, Wall Street's bought in. A lot of the globe understands Bitcoin, and it's kind of, I think, the stepping stone to understand the thing that is more exciting and more powerful, which is ETH and the Ethereum network.
Vivek, do you agree?
I just love approaching the space positive sum. I think there's a place for a few store of value assets. I think Bitcoin is first and it has a place. I think the network value of a store of value where the world's assets are transacting and it has a yield and it's productive is orders of magnitude higher. But no, I agree. I think both can coexist peacefully. I think ETH will flip Bitcoin as we start to see those upside catalysts for ETH. So I think there's more upside in ETH. I think it's a more interesting asset. And there are security issues. Ironically, one of the mitigants could be that if Bitcoin moves to proof of stake and lives on the Ethereum network and is a massive, massive network still. It can still be a multi-trillion-dollar network just on Ethereum. So there are solutions. I think that they'll be addressed because Bitcoin's it's very big.
Right.
So things like quantum, things like miner security can be addressed. People can mine at a loss if they have to and figure it out. But no, I just think if we want to look at growth and positive sum outcomes, I think ETH's upside is so high that it's just the most interesting asset by far.
Yeah, I agree. And I think there's a lot of others that agree, which is why I would say the DAT world, the Ethereum space has really picked up. We've seen, I don't know how many DATs we have now, at least 10 probably, that are trying to accumulate ETH because I think they all believe the same thing. And so I want to transition into your guys' thoughts around DATs. Since, was it May, I think, is when Joe Lubin announced that he was launching SBET. And we've seen this, proliferation of others afterwards. And that has been a huge catalyst, I think, to drive the price of ETH up to, I don't know where it is today, but it went up to close to 5,000. It's probably around 4,000 or something today. But it was down at like 1,400 in April. So it drove it, quite a long ways. I'm just curious, your guys' thoughts on the importance of these DATs. So first, let's start with the importance. And then I just want to understand, do you think this is still early days for DATs in terms of like right now they kind of just raise capital and buy ETH? Do you think that they're going to do a lot more and they're going to look a lot different in, let's say, a year from now or 2 years from now or 5 years from now? Or like, what is the role that these have in the Ethereum ecosystem?
Danny, you take the first one. I have a lot of opinions on the second.
I have a lot of opinions on the second as well. It's probably early days. I mean, I think these will go through lots of evolutions. Like the game for, especially probably the small players, is going to be leverage, and leverage is always exciting to watch. I think that some will succeed, some will fail, some will merge, and will ebb and flow. It'll be, a fun thing to watch, and I think overall probably a good thing for the ETH, the asset in the Ethereum community. I will jump in. I do think that a good version of these and the ones that I think will be lasting are going to become kind of the poster child for the future of on-chain asset management. Like ETH becomes kind of that root and basis in the network, but as the global economy moves on chain, these are going to be the best positioned actors to begin to seize innovative, on-chain yield, utilizing new real-world assets, utilizing native DeFi, having global access, all sorts of stuff. Like I do think that the game is going to continue probably to be for these companies to accumulate ETH, but the methods in which they do so is that they're going to be using the chain. They're going to be innovating on chain. And so that's why I think they're beyond just people like buying and holding, number go up, ETH, buy and hold, but it's really, I think, the innovation and the competition for that innovation that's really exciting for me.
Vivek, you have something to add?
Yeah, we have very similar views on this, but the point I would emphasize is there are yield opportunities that these treasury companies can unlock and showcase for the rest of the world. The ETH treasury companies allow Ethereum itself to effectively have earnings reports. It allows every quarter a slew of different companies that hold ETH to showcase why they're differentiated and what they do with the Ethereum ecosystem. Some will stake, some will restake, some will use their assets on different layer 2 networks and earn additional yield. Some will have cash reserves and put and invest in real world assets, which are tokenized on Ethereum. So there are so many different ways to use Ethereum to generate yield and differentiate that I actually think a plethora of ETH treasury companies can exist. The part that I'm sort of baffled by is there's a lot of Bitcoin treasury companies, and Bitcoin you can do exactly one thing, which is hold it. So that's a game of scale, and that's a game of leverage, and only the biggest companies can access leverage, and that's MicroStrategy. So MicroStrategy has had a huge head start. They've paved the way. They've raised a lot of debt. It's really interesting debt. They call it Bitcoin yield. I'm not exactly sure what that yield actually is, but one company can pull it off, and they will continue to. I don't know what the differentiators are for the others. That being said, for ETH, every single one, whether you're $12 billion like Tom Lee's and you're playing the scale game, or you're one of the smaller ones, but you're doing block building, you're actually staking yourself, you're restaking. Every single one can be differentiated, and that's really, really cool. I think these will be pillars for the ecosystem going forward. Again, some will fall, some will rise, some will merge, but they are a very, very good thing to amplify what the use cases for Ethereum are. And the more use cases exist on your blockchain, the better of an ecosystem there is for DATs. And this is where ETH again shines.
How big of a deal are these earnings reports on a quarterly basis? Because I think one of the good things about MicroStrategy is that you had Michael Saylor out there, one going on TV and just screaming about Bitcoin every day. And I think that taught a lot of Wall Street about Bitcoin, right? And then they had their earnings reports where they talked about what they're doing with Bitcoin, et cetera, and why it's an important asset. And I think that was very educational to Wall Street and to the masses, to be completely honest. Ethereum, we now have that at a whole nother level. You've got 10 companies doing this now, which I think is super cool. But as you said, they can do so much more. So they're able to deploy an Aave. And so in their earnings reports, they're going to be talking about how they deployed an Aave and what they've earned and, the different strategies to do that. To me, that I think is one of the most exciting things. Do you think this is a big deal for the other institutions to sort of learn about Ethereum and figure out what's all possible on there? Or do you think that they were going to figure it out anyway and they're not really paying attention to what these DATs are doing?
They weren't going to figure it out anyway, because if I just speak from personal experience, I never had any inkling to experiment with anything in crypto while I was on Wall Street. You're taught to play it safe, which is a good thing, by the way. Like the reason the U.S.
Right.
capital markets are the biggest and best is because it's not move fast and break things. It's literally move very slowly as regulation allows and have safety and security and reliability and uptime. US financial system honestly sounds a lot like Ethereum. That's what they're optimizing for. So yeah, now it's a show me game. Like people need to see precedent. Institutions need to see precedent. If they see treasury companies that are allowed to take more risks, that can try different things, say, here's how Aave works, here's how LPing and Uniswap works, here's how deploying on layer twos work, here's how using deploying your capital on L2 is advantageous to an L1 potentially. Once they see all that, all of the Wall Street analysts are going to dig into that. They'll have models. They'll have models for all the different DeFi applications. It's going to create a Cambrian explosion of curiosity, and then people will start experimenting and they'll start using this. And I think a lot of Ethereum's applications have been battle tested through a lot of ups and downs over a decade. So it's the safest place to deploy real capital, and we're going to see that proliferate.
You mentioned that with Bitcoin, there's kind of only one that can make it because they can't do anything with it. With Ethereum, maybe there's going to be a bunch of others that can make it because there's just lots of different things they can do. What is it that you're looking for in these ETH DATs in terms of trying to guess which ones are actually going to make it long term and become the biggest? Like, what is the thing that they need to do to get right? Is it just who can generate the best yield? Who can, is doing it in the more like institutional grade way where it's sort of the safest and most risk adjusted? Or like, how do you guys look at the success of these in determining who's gonna make it long term?
I don't think biggest is the most important metric for ETH that specifically. For Bitcoin, it is, because again, the bigger you are, the more access to capital you have. For ETH, obviously, I think Tom Lee has the biggest head start, and he's the largest by far. And because of that, he's going to have an MNAV premium, and because of that, he's able to continually accumulate more ETH. That's enormously important, and I'm really, really, really happy that he's a flag bearer there. But there can be small ETH DATs that are hugely profitable, that generate free cash flow, that have unique ways to tap into DeFi that can just exist without needing to grow much more. So that's the thing. Like earnings reports are going to look pretty good once they start seeing the profit margins, because it doesn't take a lot of people or operational overhead to stake ETH or to restake ETH or to use DeFi. And it scales with capital, but the people don't need to scale. Once Wall Street starts seeing these are profitable operating models, whether small or big, I don't think it's really about size; it's about profitability. So,
well, and it's also like you buy a new ETH DAT because you want it to have more ETH per share over time. You expect it to have more ETH per share. So like Bitmine has the they have the MNAV game, they have the size game, but as you see other ones begin to have yield games and playing other types of differentiators, then that might spark, oh, they are differentiated, they're playing a different game. They can maximize ETH per share in a different way, which might actually spur new kind of shifts in kind of the MNAV landscape. So I don't think the game's over. I think that there's a lot of opportunity for innovation.
I think the interesting thing is, SharpLink hasn't been able to raise for, 3 weeks or 4 weeks now or whatever, because it's been in a discount. But every week they announce how much they've made off staking rewards. And they've been around for less than 6 months. And they're, I think, driving I think their last one was maybe 450 or close to 500 ETH in 1 week from staking rewards. And I don't know what monetary, what number that is in dollars, but it's, I don't know, probably 100, tens of millions, maybe. I'm not sure, but it is a lot, right? And so it's pretty crazy to see that, they don't even have to raise capital anymore, and they're already making a ton. And like you said, they don't have to hire more people. That's automatic. That's just coming, and that's compounding too, right? And obviously they'll find more ways to raise and do more things where they can ideally increase that yield. But it's pretty amazing to see. And like you said, in Bitcoin, that doesn't exist. You can't do that in those. So I'm excited to see where that all goes. As we wrap up here, I just have a couple questions, and these are going to be more predictions. So I want you guys to put your hat on and look into the future for us. But two predictions. So one, you mentioned something about ETH to trillions, I think you said, if this all works out. What is your guys more realistic? Where do you think ETH is actually going here in, I don't know, whatever time frame you guys want, by next year, by 5 years, 10 years? Where are you actually expecting it to go? You don't have to give exact numbers, don't worry. And then on the other side, let's look at Ethereum. What are what are the adoption predictions that you guys have? Whether that's, I don't know, tokenized stocks, some sort of TVL for that, or it's, users, or it's, I don't know, whatever numbers you guys care about. Like, what do you think Ethereum's going to look like in 1 year or 5 years, 10 years, whatever, again, time frame you guys kind of look at. So if you can give your ETH prediction and your Ethereum prediction, that'd be great. Who wants to start us off?
Cool. I'll go first, and Danny, you wrap up with the future of Ethereum. It's exciting. For ETH, ETH hit $1,400 this year, and I was staying consistent. I still think it's a 10 to 12 to 15K asset this year. I think that we should have over $1 trillion of network value this year. I think
2025, or you mean in the next 12 months?
2025. I said it when it was 1,400 too. That's for this year. I think ETH should be NVIDIA's market cap in the medium term. That's in a year or two. I think ultimately ETH will flip Bitcoin. So we've written papers for the long-term value being tens of trillions or higher, and that's when ETH becomes that global collateral that's trustless. But in the short term, I think 10 to 12 to 15K this year, and then NVIDIA's market cap the year after. Let's talk about Ethereum network. I'll leave it with a directional prediction. I think there will be a tremendous amount more of institutional layer twos. I think the layer two model is going to be fully vindicated and thrive and really scale Ethereum. I think we're going to see trillions of dollars of real world assets on chain. And I think we're going to see some really, really cool tech advancements in Ethereum that really is going to keep it the platform of the future. We're going to see a lot of AI innovation. We're going to see a lot of zero knowledge proof based innovation. Danny can probably expand on that, but I think it's going to be the innovative hub. It's going to be the finance hub, and it's going to have a plethora of institutional blockchains built on top of it.
Nice. Love it. Bullish. Yeah. Danny, how about you?
I'm not one to make price predictions. I will say that ETH is, from my perspective, the most fundamentally valuable crypto asset. Markets obviously take their time to figure out, to adequately price these things. And so I think if you're betting on crypto, you should bet on ETH. And then over the next few years,
roundabout way of saying you're bullish on ETH, eh? Like, so proper. Well done.
If you're over the next few years, a number of $1 trillion+ markets are moving on chain, and they're not just going to move on chain in vapid ways. They're going to move on chain and have a ton of utility powered by them. So that's definitely what we're betting on Ethereum, and that's what we're betting on and doing with our rolling up our sleeves and doing at Etherealize. So I'm very, very confident of that.
Cool. Awesome. Well, guys, this was great. It was so nice to have you guys on. I love to hear the kind of inside knowledge on what's going on in the institutional world, because I think that a lot of our audience doesn't really get that. So it's great to have you guys on to share that. If others want to follow you guys or help you guys in what you're doing, give 2 seconds here to just share where people can find you or where people can help.
Absolutely. I mean, you can reach out to us on Twitter. At Vivek Ventures for me, at Danny Ryan for Danny, Etherealize.com. You can reach out there as well. And if we want to grow the ecosystem, anyone that wants to help us grow the ecosystem, bring assets on chain, we're happy to talk.
And
amazing.
In Ethereum, you can just do things. Like Vivek just showed up and was like, no one's in these rooms. Now I am. Don't lose sight of that. It's an open community. It's an open source community. It's an open platform. If something needs to get done, just do it.
Oh, I love that. You can just do things, guys. We'll leave it with that one. Danny, Vivek, thanks so much for joining us. Really, really appreciate you guys. And everyone for listening in, thanks for joining us. We'll see you guys in the next episode. Take care, everyone.
We're sending Kyle Reidhead, our head of research, to the UK's largest Web3 summit. I'm talking about Zebu Live, happening October 21st and 22nd in London. Want to join? Use our code MILK to get 20% off your tickets. Hit the link in the show notes and say hi to Kyle for us. Want insights on what's moving crypto markets and how we're trading each event? Subscribe to our channel and join the Milk Road Daily and Pro newsletters and start investing like the top 1%. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.